Hello, hello, welcome. Just give me a minute while I send out the invites for today's live stream to the Discord, and then we will get started. Everyone, I think I get better at this by now. Oh, click the wrong thing. Welcome. Just give me a couple of minutes to get this sorted, and yeah, we'll get started. Why is that not coming up? Seeing live. Don't know why it's not. Oh, there we go. It's coming up now. Right. Awesome. Copy paste. Awesome. That is it now. Shared. Just gonna wait for a couple of people. Oh, why is that doing that? Right. Sorry, I don't know why, but my things kind of went off. Let's see if I can do that. Just sort my computer out. I'm prepared for today a little bit. Hopefully that'll work now. I might just have to do this dual screen style today. Let's put this here. Okay, that's up. Let's see. Having to quit my other parallels. I'm trying to run it on parallels today, but seems to not be liking it. My other screen just went dark. So I had to move inside because it started raining bad. So yeah, right, okay, that's now working. Awesome. Just share my screen now. And we can get started. Sorry for the delay. Should be better than this, but yeah, clearly not today. Chrome, Windows. Just add it to the stage, and then I'll widen the screen, and then we'll get started. I mean, today we're just going to go through like where we kind of continued last time. So let me now enhance this. Okay, awesome. Right. Sorry about that. It just took a wee minute for me to get started there. But how's everyone doing, guys? Are we all good? Yeah, so if you were here yesterday, you would have seen that we were building this weekly open range breakout strategy. And we didn't get anything like too good to begin with. I mean, to be fair, it probably took me half an hour to almost an hour to kind of get everything sorted, but we got there in the end. Mason, how we doing? How we doing? Yes, all is good here, apart from don't know why, but my other screens went down just as I went live because I moved from outside to inside. It started raining, and have to improvise with the one screen, which is a bit of a hassle. So I'm trying to build while seeing everyone's comments, but hey, we got there in the end. But yeah, what we done yesterday is we built this strategy, and to be fair, like, it was okay. We didn't get anything great from it, but I put that down to not having enough time to actually define and test anything. So what I did today was, just quickly before I ran on the stream, is I wanted to kind of change it and kind of move the methodology to something that I'm a bit more familiar with, and that's average true range. So you'll see this is slightly different from yesterday, and I can quickly walk through you. It's quite a simple system. Once per day at 05 in the morning, 01:05, which is when the market opens on my server time, or just a minute afterwards. We delete the previous pending order. In here, what we're going to do this time is I'm going to check the daily. Rather than the weekly, to see if we're going to get difference in the daily. And what I've done is I've done the average true range, because I prefer to do that, because we're then taking like the average true range of the past hour. What I would prefer is to kind of update that every hour, so then we're kind of moving in line with the sort of ranges for like the last hourly close. So like, obviously, if we get a big spike, we're going to see the ATR move up. We kind of want to create that extra space, but we're just going to do this for very quickly now, just so we can run a quick test. And yeah, it's a fairly straightforward system. If you remember yesterday, SM is space multiplier, so space multiplier is here, so times the ATR, the risk 1%, period 1 hour, so the 1 hour for the period, multiplier 2, that's 2 times 1 hour ATR, and TP just 100. So nothing's changed in terms of those sort of things. The difference is, what we've got is the orb. The orb is saved in this variable, the open of the daily, so here, plus the stretch. And the stretch is here, we got this multiplier here. So yeah, the open plus the stretch equals our B up. B up is our breakout area, which I've placed here in the buy pending order. Again, same things for the buy and sell. Stop loss and take profit, so nothing's changed in that regard. And then what I've done is just once a day on the Friday. That is on the Monday. That is meant to be the Friday. There we go. Awesome. We're then deleting pending orders and closing positions, just so then we're not kind of holding over. Holding over the weekend, because what we want to try and do is obviously cut our costs for the best way possible. And actually, before I move on, going on about costs today, something that I actually found out in my 7 years of trading, I never knew this, is what happened yesterday. If anyone was in trades, holding trades with negative swaps or positive swaps, we would have seen, because we've got the Easter holidays coming up, so Friday and Monday, there's a thing called an Easter rollover, which I never knew. And what it does is it rolls over, obviously, Friday, Saturday, Sunday, Monday, plus the current day. So it's a 5 times rollover. And it kind of it's always like +2 periods. So it actually happened overnight last night. So if you were holding a position, you'd actually get a lot more swaps than typical. So 5 times your typical swaps. So if you're trading anything that's like normal, then obviously you would have hardly noticed too much. But if you're trading something that has crazy swaps, it could have been pretty catastrophic just for your holding costs. So it's definitely something that I would say definitely pen it in, look into it a bit more. Where are the days? But we obviously know Wednesdays triple swaps, but what other times or holidays is there going to be that might actually affect swaps as well? So it's something that I'm going to look into over the next couple of days to see. Okay, is it any system that I have that holds over a duration period of over a day? How does it react when you get these singular days? So is it worth holding over these periods so you're not getting hit with bad swaps? Luckily, for the most part, one of the main things that I trade is dollar yen, and I'm mostly to the buy side, so positive swaps wouldn't make much difference. But yeah, definitely if you're looking to short sell some things related to the dollar, maybe worthwhile looking at. So yeah, I just thought I'd just let you guys know. that part because I found it quite interesting today. It was a new thing that I've discovered today that I never knew about. So, yeah, I mean, I guess the only way to get around it is just go futures, and you don't need to worry about that. So, I suppose that's the other way about it. But yeah, so very simple system. I've done a quick optimization on it, right? And I think, yeah, you can see that awesome. And the results weren't that great. Like, there was more negatives than positives, which I don't really like to begin with for the most part. But because we're only using it as a space, I don't mind it at the same time. It's not like a stop loss or a take profit level. It's kind of just how big the space is. So I'm not the biggest hater on it, so I'm not too bad about it. But what we did see is if I go back on one, hopefully, let's see if I can. Let me try find my latest back test so that I can show you the optimizer. Yeah, okay. Let me zoom in here, pull this down. Oh, zoom out a little bit. So, again, I'm going to go through, like, this is something similar that we would, like, this is something similar you would see in Martin Software OMS. And basically what we're trying to do is find, like, the best fit parameters. Or what I like to do is try and find the best average of parameters. So we can see that, like, anywhere after 6 seems to be not too bad and stable on this side. Compared to 1, 2, and 3, we can see that that is really, really bad in terms of negative results. But we can see some greens and reds here. This is on the tip here, so obviously this is going to be to like the 1 hour ATR, which is obviously quite a small stop loss for the most part of the times. I can't get this to spin now. Oh, there we go. Yeah, so we can see that around 6 to 10 is that area, but what we can see is, look at the other side. Okay, 6 to 10, we can see there's a lot of green around here, and I think this is where Martin Software is really good. Rather than us trying to be right, okay, whereabouts is that sort of like best average? Obviously, his smoothing software does that, so maybe that's something that I'll bring into the streams as we go along. We get something that's maybe worthwhile to see. Can we actually just make this process a whole lot quicker and better? Because right now I'm trying to visually guess, and I would personally say it's 4 and about 8. So 4 and 8 are the best sort of metrics. I mean, obviously we can check here, but I quite like that area. But I'd maybe go like maybe between the 8 and 9. So we can see, like, if we look to the very back, this area here, that's your peak. And then, like, somewhere around here is probably better than here, because we can see it's got a steeper drop off here where it's a slower moving. So you could choose the peak, but you can see just that left side of the peak, it drops off quite sharp, where to this side it doesn't. So probably pick something like 8.5. And what I did is I actually ran that test. So my initial period was until 2023. So this is the out sample somewhere around here. So this was our in sample we done from 2019 to 2023. You can see it's got a good up, but we came down at this point, and this is from the out sample. So the out sample proved that it was profitable. So there is maybe something here. Again, I'm not too, like, again, this is at a 1-to-1 basis, by the way. So this means that we have got, if we flip a coin, we've got a 60.75% chance that we're winning more than we're losing. So on a 1-to-1 basis, I think this is really good. I think what will be quite interesting is if we can extend the take profit and see, how much can we sort of like squeeze or milk out of this strategy when we've got the momentum. So this is something that we can actually maybe kind of optimize today. My only worry is when I run the test, it was actually deleted on Mondays and not deleted the rest of the time. So I'm going to quickly run this test just to make sure that I've not made another mistake. But oh no, I think I updated it, didn't I? Let me double check. So let's put 4. Let me just quickly download it and quickly run that test. So maybe that might have an effect. It might not. We'll see. So 8.5. And we have 4. Let's just see how much different we get, because we're then deleting and closing the orders on a Friday. Because when we increase the sort of take profit, we might want to kind of hold certain positions longer. But then again, we then have the counteract where we could get multiple positions in the week as well. So that's a possibility as well. This is why it's very crucial to kind of watch the visualizers so you know exactly what is happening with the system. Because you might build a system, you're like, yeah, I'm fine with that returns. But then when you're actually in the trade, you're like, oh, I thought I was only in one trade at a time, where you could, in fact, be stacking these trades up. And then there is a little bit of luck involved when it comes into that. Let's see what we kind of get anyway. Probably going to get a slightly different result with the close, not having a close on a Monday. I mean, we're deleting the order every day anyway. It's more a case of just closing on the Friday. It might be interesting to kind of close at the end of the day, so then we're actually taking each day's intraday volume as well. So that's maybe something that we could do, like every day. Get rid of this. It just means that we don't need to worry about overnight costs. We don't need to worry about anything like that. We're just purely taking the day's volume. So that could be an interesting little test as well to do. I mean, I would say it's probably one of my more preferred sort of methods, just because as the years have gone on, I definitely went more down the sort of day trading route than anything else. But, you know, I do have a couple of strategies in there that are, you know, I will hold more than a day. So I think it's good to have maybe a little bit of a mixture. So let me just let this play out. Then we can run another test of seeing, okay, how does this hold up against closing at end of day? Because what you might see here is, like, you'll see flat periods, you might see big periods. Because the stop loss is 4 times 1 hour ATR, there's a very good chance that during certain periods we could be holding certain trades a little bit long, like we'll be in multiple positions at the same time. But yeah, we'll have a look. Because already we've actually closed on Friday. This result's looking a little bit different. It's good to see that so far the out sample is still kind of holding up, but just not anything that's crazy good. And just FYI, I've not actually tested out any other market yet on this, so it could be quite good. Other versions as well. Like, the good thing about this strategy, if you build it, is you can change your point of like initiation anywhere. So the POI right now is the daily open. You can put it to the daily high, the daily low, weekly high, weekly low. You can put it to session highs and lows as well. So you can test like loads of, like, just based on this one strategy, you can build so many different versions of it. They'll all be different. And I do recommend that you go and do that, because I do have a strategy that I'm working on at the moment that is similar to this, but we're looking at a specific sort of time horizon, I should say. So yeah, like, there is definitely something here, maybe not in the daily open or the weekly open. That might just be the edge is very strong on a Monday. Again, if we see that data, then, you know, it makes sense. So yeah, like, from a first initial 1-to-1, okay, the win rates went down to 55, but we've still got 1.33% profit factor. Sharp ratio, it's below 2, but again, you know, if we put this in a portfolio with other sort of strategies, then, you know, it could be really good. But yeah, 102 trades, not that much. So let me now just go see, how does it work when we change it that close at the end of the day? Because then it means that we're only ever now in one trade, where I believe there might be times where we could be in multiple trades at once. So let me just have a quick look. So maybe not. You know, and there's, like, the good thing about this sort of thing is we can actually test it, like, does this perform better after a down day? Does it perform better after an update for each side as well? So there's so many just like non-optimizable like filters that you can try and add to this. So, like, you know, like, another thing you can try out is, after a down day, how many times does it finish a down day the next day? Like, these are all small things that you can kind of find out, and you can then base a strategy on that as well. So like, after a down day, we've got a 70% chance we're going to have another down day. Well, we want to maybe build a strategy that then takes advantage of that 70% edge that we're going to finish lower. Obviously, we don't know how much lower we might finish, and that's something that you can measure as well. These are all like little things you can test where rather than the edge being in the entry, the edge is actually in that sort of like singular day as such. Again, there's so many like little patterns like that that yeah, it's well worth having a look at. Like, I think that's the thing, right? You can actually test so many different things. Like, people always say, okay, where can I get strategies? Well, you can actually just honestly just build, test, create anything. Like, you're going to find stuff online. Some of it might be complicated, like this sort of stuff. Like, once you get used to building certain things, this is simple entry models. You've got an area of interest, you've got a space, you've got the breakout. Again, you could do the opposite for mean reversion. Maybe this is going to be great for some mean reversion strategies on certain assets like Australian dollar, Canadian dollar, or Australian Swiss franc, or New Zealand against Australian dollar against New Zealand dollar. S&P 500, looking to the long side, we could take the point of initiation, the space, and then take the mean reverting long biased only. There's so many things that we can actually do with these sort of systems. The problem you're always going to have is you're going to be taking a lot of trades with the lower space that you have. So that's why I'm saying you might need to find the edge before actually applying the entry model, if that makes sense. But yeah, one thing I would say is like I would test these sort of things on indices long only, because obviously they're like, for instance, that's an edge in itself. Like, stock market goes up, okay, you only trade long only. Look for these breakouts, because 8-9 times out of 10 years are always going to finish higher. So again, these are all things that you can test and implement. The edge is in the stock market long term to the upside. So build a strategy around it, if that makes sense. But you could do both. You could do mean reverting plus breakout as well. So you do mean reverting to the low, you can do breakout to the high. So there's different sort of ways that you can go about testing and building strategies and different models that will all slightly different. Like, people might be like, okay, I've got too many breakout models, but as long as they're uncorrelated, they're taking it from different areas, they're not kind of like intertwining together, that you're all like in one massive position around the same area, then I don't see a problem with it in my eyes. Yeah, right now we are not seeing massive gains because we're obviously, like, because the stop loss is quite big, we're only taking the intraday volume. Some days we're not going to get big moves, but some days we might get big moves. Yeah, maybe I just apply this as is and we'll just try it out in the NASDAQ. Because the space is so big to the downside, I don't think it will be trading the downside that much, but it'd be quite interesting. Like, and that's another robustness metric in itself. If you apply the same strategy with the same conditions to a different market and it works, that's a very good sign. Like, if you remember back to like Martin wants to see like it working on multiple markets, but if it's working on multiple markets, it makes sense as to why like they're all they're all kind of like the same market. Like the one that I showed, we built for him. Obviously, we've seen that it worked across multiple markets, but it was all the same market, so he wouldn't trade it because it would be correlated. But yeah, he went on about saying like multi-markets is obviously good, and I do believe that as well. Like, I do think having multi-markets for certain strategies is a really good sign. But if you have it that only works in the singular market, I wouldn't be too worried as well. Like, that's one thing that I don't mind. Like, I've got strategies that only work on one market and they still have been working. Touch wood. I don't want to jinx that now, but yeah. Okay. So somehow we got less trades over the same period of time. Doesn't make sense, does it? Maybe. But yeah, let's try this on NASDAQ, maybe. Let's try it on NASDAQ. See if we can get any sort of success. I doubt it's going to take that many trades, but yeah, it'd be cool to see. I don't think like this wouldn't work too well on the S&P, because we don't get too many massive days or massive day movements like we do in Nasdaq. What's the market? So gold up to, oil down to, down up almost percent, making up almost 30. Wow. European stock at 1.55, S&P 1, Nasdaq 1.5. Okay, awesome. Interesting. Yeah, I've got quite a lot of movement on today, which is good to see. Good to see. Interesting to see how this works, because obviously we go through in this period of bull and sort of bear market as well. So it'd be cool to see how it works around 2023. That was a bear market, I'm pretty sure, something like that. You know, again, like something that's quite interesting. Like we're taking like a space breakout, right? But like we can see that the space, like we sold here, which is massive. Like that doesn't make sense to sell here when we're so far down. Bonjour. Sorry, I cannot speak French. So Nesman, I don't understand your question, I'm afraid. Oh, I forget. I can show comments on the stream. How does that look? Let me have a look. Ah, okay, cool. So yeah, we got the bear market 2023 out of the way, which is interesting. I did think this sort of strategy might work on Nasdaq, just because it's got that natural long bias as well. Maybe we could shorten the sort of space value, and it might actually give us a lot more trades and work better. But you know, I say like I knew it was going to work. I didn't know if this exact model would work, but like I have built something recently that is, as I said, like point of initiation space on the Nasdaq that works pretty well. This is looking not too bad. This is looking pretty good so far as well. Not really enough trades, but it is looking not bad. Again, goes through some slight drawdowns, but overall, not too bad. Not too bad. I mean, we might be able to get away with like a smaller stop loss because obviously, naturally, our winners are going to be maybe slightly smaller than the losers. Yeah, see, like we're taking that at the end, so we're not really capturing much of the move. The downside is obviously if we look at shorts 50%, that's not too bad. Probably trades. So I'd need to look into how much profit the shorts are actually generating, but maybe it's something that we do like when we're in an uptrend, we have a bigger space to the short side than we do the long side, and then when we're in a downtrend, we have a bigger sort of step to the long side and the short side. Again, this is all things that we can test and try out, which I always love. Also, we can also like the thing with indices that I always find is we don't really want to be trading around Asia session too much from a capacity sort of reason. So if you're growing your Darwin and you're getting more and more capital invested in you, then one of the things that like I would say is like we don't really want to trade illiquid markets or like areas where there's less liquidity, because then that's where slippage is created, and this in hand will reduce your capacity in Darwinex. So yeah, maybe we only look around trading around New York session for NASDAQ, S&P. We trade and look around the sort of Nikkei around like the Asia session as well, because we know there's going to be activity around there for the Asia session as well. I mean, I think the Nikkei is one of those ones where they'll probably see, I think most of the time you'll see like a lot of volume come in New York as well. I'm not 100% sure that's that's not facts. That's just me trying to think about it. But we know again, the FTSE we will definitely see. Like the market will be liquid when we're in London Open as well. So if we all think about these sort of things, right? It's completely different to currencies, I would say, like because currencies can be liquid for a lot longer than certain markets as well. But yeah, if we think about like how people are doing like stock trading, or if we think about like New York Stock Exchange, what's the opening hours, then that's where we're going to see the most amount of like liquidity, especially at the first 2 hours of the session as well. So we could maybe just focus on building a breakout sort of system using point of initiation and space during that time, because then that means we don't need to worry about capacity, don't need to worry about getting filled. The liquidity is there. And, if we're scaling to say 5, 10, 15, 20, 100 million, who knows? Who knows how far any of us will actually go in terms of investor capital. But we want to make sure that our growth isn't being stunted because we're trading around liquid times, if that makes sense. So let's just run a quick optimization around 2020 to 2023. We'll change the space a little bit. Let's just go 1, 1. We already know it works on 8.5, so let's just go to 8. I don't really want to go lower than that. And then we'll do 1, 1, and we already know 4 works, so let's just go to 4 anyway. Maybe 4 is really good. Maybe it's not. But again, we'll keep it 1-to-1. The good thing is all this is 1-to-1 at the moment. Obviously, right now we're closing the end of the day, but maybe we've got a day where we are like our return is being stunted by the 1-to-1. So these are all things that you can either have fixed targets, end of day, open, take profit. These are all valid ways of trading in my eyes. One of the systems, I'm in a short at the moment on dollar yen. I don't have a take profit. It just has a pure it doesn't risk a lot because that's why I've got lots of different systems, but just purely to the short side, open take profit, because for my point of view is like the yen, the dollar against the yen kind of days where the moves are crazy. I want to capture that whole move if I can. And that's why I like having systems that are fixed profit, some that are open, some that are trailing, all work well together. So then we're capturing short, medium, and long-term markets, or even intraday volume as well. Rob, how we doing? Yeah, I mean, everything's been fine today, Rob. No, well, actually, no. At the start, obviously, I'm now down to one screen because my other screen decided not to work as soon as I went on stream. So a little bit of a problem at the start, but quick fix. So we're operating out of one screen today. But yeah, it's minor. So we'll see what we get for the optimization results. The good thing is we know the strategy works already in a certain metric. We know that there's maybe a little bit of robustness to the strategy as well. The fact that we've seen it work on gold, same settings, and NASDAQ, same settings. So yeah, it could be quite interesting to see where we get with this today. Yeah. Does anyone have any questions or anything like that at all? I've just been rambling on there, just about, I don't know, I'll always just talk and sleep trading. I can just keep talking on any subject when it comes to these sort of things. And of course, all this is based on my own beliefs, the way that I trade, and the things that I've discovered as well. Other people might tell you different, which is fine. I don't have a problem with that. I don't think anyone is 100% correct, but there is, I think, yeah. How can I best say this? No singular person knows the 100% right way about trading, but some people know like little bits that is what creates the edge. this is looking crazy. But then this is obviously taking like a 1 hour. Can we look at support resistance zones with Juma, please? I can potentially build one. Like, I'm not going to do it today, Rob. But that could be a good one where like I would need to plan it out. So then I'm not doing anything like I did yesterday, if you know what I mean. So I can actually talk you through it, show you that it works. But it is possible. It takes a little bit longer to build support and resistance levels. Alternatively, you can use an indicator. Then you can input a custom indicator into FX Dreamer. And then you can use it that way. There's multiple ways to go about it. It would be a little bit more of a bigger project, and it depends on everyone will draw support and resistance levels slightly differently as well. So again, what I might look at might be slightly different to what someone else might look at as well. But we could maybe do it as like a feature topic in the future at some point. I like to kind of keep these quite raw because it's I don't know. For me, I'm not a big person at presentations. Like if I was to sit here and just present to you, I would get bored of hearing myself as well. So I try and keep it, similar style to what Kieran does. Kieran tries to keep things, raw, authentic. But yeah, definitely maybe something we can look at down the line, Ron. Mason, have you any plans to adjust your systems for the new FTMO swing rules? Good question. I'm working on it, but yeah, I mean, sounds quite bad, but I've not done a withdraw yet for them to change the conditions for me at the moment. So I'm kind of holding off on that until I have the solution, if that makes sense. What I'm trying to do is I can naturally build in NFP sort of restrictions rules into my strategies. That's easy because it's the same time every month, although like it will change a couple of times, but obviously I could manually input that. But like, yeah, it's going to be tough because obviously I think the hardest part about it all is I could get the data to say when the events are going to be, but the problem is obviously it's like, was it 5 minutes each side the rule is? It could say it starts at 2, but it doesn't actually, in fact, start till like 10 past 2. And you've set it to 2. Trade after 5 past 2. Don't trade before 5 minutes to 2. And in fact, you're still getting caught. And I think that's what will catch out a lot of people. I believe you can hold a position as long as it doesn't hit stop loss or take profit. But I feel like that becomes a little bit more gambling. So I'm still working on the solution. If I find the solution, I will let you guys know exactly how I went about it. But as of now, it's a little bit more difficult. What I'm trying to look at as well is like, okay, can we like, I've not really done heavy like looking into it because I'm not too worried about it at the moment because I'll probably just manage it manually. I'll look at the economic calendar that FTM will give me. I think they've got it on the website that tells you what you can't trade during that economic calendar, and I'll just kind of turn off. Close. I mean, it sounds quite bad, but like before the swing count, it was kind of just a set and forget. You come back at the end of the month, you withdraw your profits and just reapply. It was a lazy kind of set and forget in a good way, but now I've got to be a bit more thinking about it. So again, it's just maybe building a little bit more discipline into my plan to begin with until I have a full-on bulletproof sort of solution. If I build something that is meant to work with it, I would then probably, sounds quite bad, but like buy a different, like a small like 10k account or something like that and test it on that first. So if it says you got caught out here, it's not exactly one of my funded accounts, if that makes sense. So that's my sort of plan with that. To begin with, as I said, I'll just be manually managing it, which is going to be a bit of a nightmare at times. And yeah, I'll probably, if I'm ever on holiday, I might even just turn it off for the week because I'll end up forgetting and then, it's gone. I mean, the good thing is, like, that's the good thing if you build a Darwin, obviously, it's another source and you spread across different things. Because, at least I don't need to worry about Darwinex and how I'm trading because that's just the way it is. Formulas are one of the things I don't understand. Y plus X divided and minus. Okay, let me quickly go. So formula is just like an equation. So what it means is, if I'll explain this quite simple, Rob. Okay. So let me zoom out here. Okay. So this is our formula block, right? But what I'm putting into the formula are these conditions. So the ORB, open range breakout, is the candle open daily candle zero. So it takes the price of the candle open. So that could be 1, right? I then like calculate and put into a variable the value of the ATR of the 1 hour, the period of 20 times say 2, and that could be 0.1, right? So we've got 1 and 0.1. I then put 1 plus 0.1 gives me my breakout level. So 1.1 is my breakout level. I kind of hope that makes a bit more sense. Again, you could do the open minus the stretch, and what it'll do, it'll take it below the open. So this is what we do for our sell side. You could do times, but it doesn't make any sense. But again, you could do, like, I could have done the stretch here times the SM here. So yeah, I mean, it's just like, adding, subtracting, dividing, timesing, and it's just to kind of get to a final sort of figure in one block rather than using multiple. So yeah, I hope that kind of makes a little bit more sense. Okay, good to see we're starting to get some results in that are positive. Again, as I said, like, sometimes you're going to get some really bad negative results, but again, it's looking like the negative results are all from the smaller sort of spaces. The bigger spaces, 3, 5, 6, 4, are all looking a bit more stable. And again, we can see we've got lots of trades, and I think this will prove that we'll probably lose most of the return here to the short side, because it's mostly a long only market. I mean, I say long only, you can trade it short, but again, I think you got to treat the short side very different to the long side on this sort of market. Yeah, news filter is probably the way forward eventually. Hopefully it doesn't screw performance, having missed out on certain plays. Yeah, I mean, I've already tested a lot of my strategies around NFP, and yeah, it's how do I describe some of my strategies? It's actually improved, so it's quite interesting that I've never, because obviously everything's about data. I've never really done anything to do with news trading or anything like that. But when I did do it, I was like, oh, interesting. I actually, for the past 8 years around NFP on the strategy, I've been losing. So it actually improved one of my strategies. So that was good, and it's good. But then some of my strategies absolutely kill it around NFP as well. So it's a double-edged sword. What you do is then just go back, make sure you're pulling out all the. So when I took away NFP in my portfolio, it did reduce the results, but it didn't increase the drawdown. So I was like, right, okay, I just accept that I'm going to be making less return, essentially, around NFP. The problem I now have thinking is, in my eyes, news is what moves markets. If you're a breakout trader, news is what moves my positions, essentially. And there's loads of red folder news every week. So I think it'll be quite interesting. It might mean that I'm making half the return as what I used to do. But at the end of the day, profit's profit. As long as it's bringing in a little bit more income, it's a win-win situation in my eyes. Maybe my thought around it whole is because, again, FTMO is a business. Maybe the swing trading program was not that profitable for them compared to the other one. And it makes sense, when there's less restrictions. Yes, the leverage was 1 to 30 than what it was before, but people can still gamble on 1 to 30 leverage anyway. So it didn't make too much of a difference, to be honest. But yeah, the way that I view all of these things is they are a casino for traders. You go in, you keep playing until they say no. Essentially, if you've got an edge, if you're good at blackjack, you'll just keep going back to casino because you know that you've got a long-term edge. You should do that. That's the way that I view prop firms. Essentially, they are businesses at the end of the day. They all say they want the best traders, but maybe they do. I had a conversation with someone actually in the Discord about this today. Maybe they do want the best traders, but there's probably too many gamblers in there as well that's really crushing certain business models that they have. So, double-edged sword again, but yeah, it'll be interesting. I believe you can hold trades prior to the event though, and you guys close trades mostly in a day anyway. Yeah, but I think I'd need to read into the rules. The email that I was given was not specific to say that it's only that I'll be given a new contract once I make my next withdrawal, if that makes sense. So I'll be interested to see if anyone gets any different sort of conditions, because I'm is it premium prime? So I get 90% splits and things like that. So maybe the contract might be different because I've been trading with them for so close to 4 years, maybe 4 years. Yeah. So who knows? I'll if anyone's interested, I can obviously let them know if anything happens. Yeah, I'm not too fussed. If I was to lose them tomorrow, it's not the end of the world. It just means that they've had enough. I'm essentially paying you to trade. So, yeah. Okay, that was a completely different rabbit hole there. But yeah, good questions. And basically, if you find anything that a wee hack for these news building things, what I'm trying to find is there a way that I can plug in sort of news trading into my MetaTrader that as soon as the numbers are pulled, then 5 minutes after that I turn my trading, because that'd be quite interesting as well, because maybe the news might initially create fake outs, breakouts, or things like that, and yeah, we'll see. I think it's going to be an interesting topic as well. I would like to get to the point where I can then do a live stream and say, does news matter? Because that could be a quite good one, and I could show based on my metrics and numbers how if I traded news, this is the results I would get. If I didn't trade news, this is the results I would get. And it'd be quite an interesting topic because obviously retail's told, don't trade around news or risk this. There's a lot of theories out there that cool to kind of see if it holds weight or if it doesn't. Because everyone that I know that's pretty good at trading loves trading around news or loves the news because it creates volatility. It creates opportunity, essentially. It creates opportunity. How is your risk per trade? 0.2%. So it varies from system to system, but I don't risk any more than 0. Most of it is 0.05 to 0.1. With recent conversations with Javi at Darwinex, we're looking at how can we increase capacity of traders, and I started actually risking less because I've been splitting the orders as well. So that's something I've been building. I think Kieran mentioned it as well on yesterday's live stream, or maybe mentioned it last week or something like that. But a way to sort of increase your capacity is rather than push the full position at one time, wait 5 seconds and get another entry. The good thing with Darwinex is that you can actually measure how much edge you gain or lose by opening later and closing later as well. So I think that's a good thing. I can look at the metrics and say, okay, over the past year, if I opened 5 seconds later, I would have only lost an extra. I would have made 0.2% less, but I would have increased capacity by 40 million. So, if we weigh up the risk to reward, I would rather have bigger capacity down the line than making that extra 0.2%, if that makes sense. But yeah, 0.2% is I think I've only had 1 or 2 trades on gold because naturally markets have been a bit more volatile, that have risked a bit more, and that is due to the ATR sort of size widening, which FYI, if I could, here's a little bit of advice I would have gave to myself if I knew, I'll just explain it. So obviously I trade a classic account, so I risk my own money. And to begin with, I only had 4 strategies. And then I got to 5, then 10, then 20, then 30. So I needed to keep reducing risk, right? But as markets got more volatile, I was like, right, okay, my risk per trade is not 0.05, 0.1. Because I'm pushing minimum lot sizes, it was actually like 0.15%. So I was like, right, okay, I need to deposit more money. And I've been in that cycle for a while. So, if you're trying to build a multi-strat portfolio, Darwinex Zero starting off with 100K virtual, perfect. If I could go back then, and because I always thought like, maybe if I need investors, people need to see that I'm trading real capital. Well, the risk engine's there anyway, as the investors like protectors. So that was a false narrative that I kind of told myself. So if I could have went back to the start when I started on Darwinex, I would started on Darwinex Zero. But yeah, I mean, I don't have a problem. I just wish I did back then, if that makes sense. But we're not here for sad stories. Okay. We have just done the test, and we can see that there's some pretty terrible results, but there's also some pretty good ones. What is interesting is we have got 510 trades here. This is a really, really good sample size, and we've got a positive result with a 30% drawdown. Yeah, I know it's not great. If you're wondering why I'm doing 40,000, it's because I've been testing based on what's in my account size or something like that. So I've been trying, whatever my account size is, I always do testing on that to see what is the real drawdown I'll actually have. And it means that I can actually do calculations better for the portfolio. And then it makes me know, okay, I'm pushing minimum lot sizes here, I need to up the deposit or something like that. So I always do back tests relevant to what I'm actually trading. So that's why Darwinex Zero, you'd be doing 100, so you've got a little bit more leeway. But yeah, that's just based on my opinion. So we can see that we've got like a hot zone here. So like hot zone, not red, but green. And we can see it's between that 4, 5, and 6. Okay. And we can see it's around the 1, which is interesting. So we can see that across the board, it kind of tails off around the 4. But we kind of know the 8 and the 4.5 kind of work. So maybe like on this end, we start to see like the hill here, down, and then up. Again, we could do a bigger test, but it just means that you guys are just going to be sitting here, twiddling your thumbs, waiting until it's over. But yeah, I think we can say that anywhere around this area is like decent. So we can say 1.5. Let's just go because we don't have anything less than 1. So unless we do a 0.5 in the stop loss, but I don't know if I'd quite like that because yeah, it's quite a small stop loss, but maybe it works. Like I always prefer a little bit more of a bigger stop loss just because in case of like a black swan event or something like that or news and you're not getting slipped like double your position, if that makes sense. The smaller stop loss size you have during news, the more risk technically is on the table because you'll be pushing more size. So it's always something that I keep in the back of my mind. Less can go wrong with a bigger stop loss than with a smaller stop loss around news. So you lose less money. And I always think from risk first, return second. So even if I'm like using a bigger stop loss and it's not the optimal returns, I know on the counter end, I'm not going to lose as much as well if something bad was to happen. There's no liquidity. You weren't getting filled where your stop loss was. I always think from worst case scenario onwards, it's probably a bad way to think, but at the same time, it kind of makes me survive as well. So yeah, so let's have a quick look at this. So I'm reckoning we're going to use something like 5 and 1.5. Let's have a quick look where the 5 is. 5. So it'll be somewhere between here. So we can expect like just about a 10% return with about an 8% drawdown. So nothing great, but again, we've done no optimization other than we found like the area that we're looking to buy and this sort of stop loss size. But again, we could apply like just a simple like new volatility filter that could be quite good for like kind of getting rid of a lot of the trades because one of the things I do quite like when it comes to trade because it's breakout is like I use a little bit of ADX, ATR as well. So you could say like the past 40 days of ATR is above the past 30 or vice versa. You can test loads of different things and that's just a simple condition. And yeah, it's just to kind of filter out some of the days or periods where we're not getting as much volume because things don't move every week, every day, like by heaps. You can look back at your own charts and have a look. So we're kind of only wanting to filter days or weeks, or if we're actually getting a lot of volume. Um, yeah, I always find as well like Monday can be the best day for trading on indices as well. So because you know the reason I say that is because Mondays can be very volatile. For instance, like lately, something goes on at the weekend. At London, at New York Open, things are going to start flying. So, yeah, that's something to keep in the mind as well. So yeah, right. Let's do 5 and 1.5. Just to kind of see where we're at, see what the sample is. It could be good, it could be bad. Guess we won't know until we try. But that's why we're doing a little bit of out of sample, so like 3 years. Let's do from 2019. Run it. Yeah, like what the reason I'm like focusing on indices at the moment is I actually don't have any indices in my portfolio whatsoever, which now looking back at it, it's like maybe a bit crazy because if I'm a breakout trader, like Nasdaq kind of suits the bill for these sort of things as well. I've also if you think about where the most volume is, like I've been looking at like just trading like ETF SPY, QQQ as well, which all kind of work quite well as well, like for certain things. Just trading that sort of just time period. But again, I've got to kind of put in forward testing and things like that because I'm more looking at like futures in these sort of areas. But yeah, like I think it's something that I feel like I've been missing out on maybe a bit. But yeah, maybe what I do actually is we'll get Quant Analyzer sort of kind of up in the background as well. And I think next time maybe we do optimize strategy as well. We use Martin software, so then we can actually run the optimization the way that he described it on his stream. That'd be quite a cool activity to do to kind of highlight how good his software is as well. Like I do it the old-fashioned way just there. So if I had enough time, I should have put the code in for the optimize strategy, and yeah, we could have done proper like digging deep into it. So just 2 seconds while I'm getting this up. We'll bring that trader up again, and we'll just kind of see how we do like out of sample. So 2019 was an out of sample year. We finished slightly up. 2023, 2024, 2025, and 2026 so far is out of sample as well. So what we want to see after 2023 is a positive result. Then we know that there is possible edge in this sort of system that we can then sort of like look at the long, look at the short side. My guess is the long side's going to prevail, and then we can potentially just add like a trend filter or something along those lines. So let's see. Maybe the shorts work very well in 2023 as well, because obviously it's like a bear market as well. So it could be quite interesting if we can somehow find a sort of trend filter to sort of shorts when we're at like below a certain like moving average or something along those lines, and then longs the rest of the time. Be quite interesting as well to see what day is the best. Maybe this is something. If I can do a little bit of work on it, maybe over the weekend, it's something getting the chart down as well, like to kind of forward test it as well. But so far, our sample is looking better than the in sample, which very rarely happens. Again, the system's not perfect, but this is why like I kind of risk a lot less on strategies, because this with something else paired with something else, like we're all going to go through different sort of periods. Right, okay, so that's actually not too bad. That's a better win right? But then it could be deceiving because we are closing sort of like end of day. NAS stream, Caswell stream. Let's take a quick look. Get into percentages. I hate looking at it like dollars and pips. Right, okay, so to be honest, like it is a negative drawdown to compounded annual growth returns, which for me is what I look at quite a lot. Like I want it as close to 1-to-1 or positive as possible. Stagnation is pretty big, but again, this is kind of what happens with certain systems as well. Like we go through stagnation periods at times as well. We can obviously have a look at where that happens. What's really interesting is 2023 is positive in a bear market, so we've managed to get a strategy when it was negative for the year to be positive, which is always a good sign. This is what I do love about trading compared to investing. And again, look where most of the profits are. 16, 17, 18. So we're looking at that sort of time horizon. And again, this I couldn't have made a better strategy to basically say what I've just been saying like literally earlier. Monday is the best day. We're looking at the New York session. So it's really cool that that's what's working. February, terrible, but hey ho. Let's kind of look at long versus short. What's interesting is around the New York Open, the long side's actually not that good. I bet the short side's pretty good. Yeah. So we could say that we're only going to trade around that 3-hour time horizon. Again, short side on the Monday is good. So you could actually trade this like Wednesday's terrible for the short side, but you could basically just say Monday, Friday, you trade short because that's where most of the volume is going to be in. People are either entering the market open at the start of the week, or exiting at the market at the end of the week, which is probably why we see the shorts being good as well, long and shorts, because we've got loads of volume coming Friday and Monday. Yeah, everything looks pretty good so far. We could do like a what if. What could be quite cool if we just select Monday itself. Yeah, so we see the profits here as well, but yeah, okay. So Monday's pretty good for the long, short, not bad. Again, that's not nice. That's better. That's the good thing about some of this like sort of software. We can look long and short as well. So the long side the long side is a lot closer 1-to-1. So there's probably something we can do with the long side. Maybe we just get rid of 17. So 16 is actually what, 2 o'clock. So maybe we'll just trade from 3 and 4, 3, 4, 5, 6. We only trade like at 30 minutes after the London Open, New York Open. But then again, short side, we can see that 16, 17 is really good. So yeah, maybe. Select all, unselect 16, 17, 18. Didn't work. Why not? Oh, silly. Always making mistakes. Right. So yeah, we can see that we've reduced the trades by almost half, and the return hasn't it dropped by half. So we can see that most of the return is coming from that sort of session, and we can see that definitely that first hour, at the 30 minutes after that first hour is seriously profitable. See that Friday is probably the best day between them both. And yeah, it's not the best, it's not the worst curve. We've now went to a negative year in 2023, so it does have its pros and cons. As in, like, we have reduced the drawdown, the average return, but now we have got an extra negative year. And so far, we've started off terrible in 2026. Better than what we did in March, though. So March has been terrible for this strategy, and to be honest, it could actually be a sign to maybe not trade it, and I might put it on the demo. To be honest, because I think this is one of its big. I know it's not as much drawdown, but we have not seen a 4% down month on this. Mike WN. Sorry, what do you mean? Yeah, we could say we only trade Monday, Friday as well. But there's loads of different things you can do with these sort of things as well. Let's have a look. Just again, Monday and Friday, reduce the trades by over half as well. And the returns haven't dropped dramatically, but the drawdown has as well. So it's quite interesting as well. Again, let's create that negative 2022 year. Was the 1 hour after session open? What do you mean the 1 hour after session open? 0, 0. No. So like this system runs at once per day, then it adds a space to the days open, and then these are the hours that, like, so 16, because it's GMT plus 2. Well, my concern with 1 hour after session spreads are wild during that time. That I wouldn't be trading it. Like, this is what I'm on about, like how I'd only be sticking to the New York session for trading it, where we've got liquidity, spreads are better, and we're not going to get as much slippage. That's why you would trade like New York session. Yes, it's going to be a bit more violent, but it's clear that the edge in this system is high around New York. So 16 is 2 because my server is GMT plus 2. So we can see that there is slight edge here, but yeah. Maybe we just do. And we go just 60, 70, 80. Yeah. It's interesting. It's quite crazy that we went from 428 to 123. That's just on the Monday, Friday. Curve's looking a bit better. Like this is probably getting to the over optimization stage. Kinda. But again, we've not even, like, this is us just testing it 1-to-1 with the space and the stop loss. So we've only kind of optimized sort of the space, which is the breakout area, but also the sort of stop loss. But I would say that taking the daily open is not going to be the optimal. Like, we could change it to, let's have a quick change to, like, I don't know. The daily high, right? Let's forget the sell side for now, because then I'd need to create the daily low. Yeah. Maybe there's big edge in the daily high. Maybe there's big edge in the daily low. Like, again, like, these are all things that we can test. So like, that's why I was saying, like, with this strategy, all you need to do is literally build it, and you can change your orb, or you can change that to POI, and you can keep changing your POI to like totally different metrics. So like, you could put Bollinger Band. You could say, okay, let's take the price of the one standard deviation plus the space. I mean, to be honest, you could just probably increase the space of the Bollinger Band. Again, you could say over the last 20 days highs, like you could say we've created over the past 20 days, the squeeze. So the past the high minus the low is like, say, like 5. When the past 20 days sort of squeezes below 5, we then apply a space above and below, so we're anticipating the breakout. So like there's so many like ideas that you can come away with. That's why I like think of the point of initiation space. So it's a really good way of just creating probably about 100 strategies. And you'll find some of them will work because breakouts, in my eyes, have to happen. Otherwise, markets don't move. So, same thing can be said about mean reversion. So, what tick data are you using for testing? I'm just using the one that's built in with Darwinex. I mean, it gives you 98% quality. Normally, what I would do is I use QDM, so that's Quant Data Manager. And there's a paid version, but there's also a free version, and you can download the historical tick data from Darwinex, but also Duca's copy. So you can actually test two different types of data, and it's always good to try it on both, because if it works on both sets of data, you know, you've kind of got a robust system. Because what I found is smaller stop loss, lower time frame that you go on, like, you know, and the broker could change things quite a bit, and the edge doesn't hold up as well. That's on my experience. Not to say that that's true, but that's based on my experience. So yeah, let's do something like, let's just test the high, +2. Again, this might be better like trading around New York. So you can build like so many strategies around like New York session with point of initiation space, again with mean reversion as well. So be cool to see if like anyone in the strategy development like takes this further, and it'd be good. I use the same programs, FX3 and MT5, QA4, QDM. Yeah. I mean, it's a good mix. It's a good mix. You can really build things fast once you get a hang of it. I do know there's a bit of a learning curve, but yeah, it's quite good. Low correlation. How did you find it in the early stages when you were first building on FX? You know, did you find it like kind of hard, or was it like, did you get a hold of it pretty quickly? Because I know like certain people go through like different sort of learning paces and periods, but it'd be good to hear. How far does Darwinex data go back? I would say the good quality only really kicks in around 2018, and that's for currencies. Kind of like your indices is a bit hit and miss. I would probably focus on Duca's copy for indices. But the NASDAQ data is fine. WS, like the sizing is kind of wrong in MetaTrader. Like you need to make a custom symbol with it, and then change like the way it calculates lot sizing, because it doesn't do it correctly in the backtester. It does in the live. Same with the Nikkei. I can show you. It's not 100% the best, but that's why I'll use like QDM. You know, QDM does go further back, but it depends on the strategy that I'm building. Like some strategies I'm only interested in the past 6, 7, 8 years, where some strategies that trade a lot less frequent on a higher time frame, yeah, maybe I'm interested prior to that, but I feel like markets have changed quite a bit. I picked up pretty quickly. I did originally start learning, yeah. I mean, once you have a basic understanding of MQL5, like FX was like pretty quick. But yeah, been here for years now. Yeah, so have I. I mean, I started FX Dreamer. What was that? And Q4 in 2022. So yeah, Q4 2022 is when I first started using it. And to be fair, it's kind of helped me just kind of build so many different systems that I've wanted to build. The problem you have is like choosing which ones to use, because you could. It sounds quite bad. Like once you understand one market as well, you could build like 100 strategies just on one market, which is not it could be good and as like a bit of fun. I think the hardest thing is trying to find things that work on lots of different markets. Yeah, it's always good fun. Always good fun. Maybe again, this is a total random pick for for like metrics, which is probably not the optimal, but again, it's positive. So we know there's possible edge in the daily high, daily low, which is interesting. The daily high, sorry. I mean, we could test this. Depends how long. What time is it? Quarter past. Go for another 15. Go for another 15. Yeah, maybe what I'll do is I'll add like a ADX. Yeah, let's do that. Let's go back to the original. We already had per se profitable strategy that just maybe needed a little bit of the old tinkering. So let's do you have any portfolio? Is that meant to say construction? Construction? What? Just explain what you mean by that, and I'll be able to answer it 100%. I don't want to kind of ramble off into something that is not what you're meaning, if that makes sense. All good, all good. Just take your time, and I'll reply back. Right, let's do ADX. Yeah, we'll just take it from the daily anyway. Do you have any portfolio construction content? Not at the moment, really. I think maybe that's definitely something that's got to be put in the works. What I'm trying to do early days is sort of help people get the idea of building, and then we're still. Oh no, we've moved to Q1, Q2 now. I keep forgetting it's the new week. But yeah, maybe what we're wanting to try and do is maybe like Q2, maybe like do a little bit more advancements, and then maybe Q3, but then look at portfolio construction. So that's where hopefully by that point we might have about 20, 30 strategies for the charity Darwin. And then what me and Kieran can do is like show you like our processes on like how we're putting the portfolio together in terms of like making sure that we're not going to be too sort of overexposed on one sort of market as such. Because right now, like there's probably like quite a few systems that are on the same sort of thing, just because we're building, putting them on. We've not got too much of a structure in at the moment. Like I have my own sort of way that I build out a portfolio and construction for my own portfolios, but we've not shown much, if anything, on the channel at the moment, which we can definitely do, because I think that would be great content for down the line as well. What do you think about reverse trading, i.e. building a losing EA on the demo master and replicating the concentrate to your Darwin through FX Blue? I mean, I've never tried it. I think I watched a YouTube video of someone actually doing it for a lot of these like scam Telegram channels, which I found quite funny. But again, like you could create a non-profitable strategy, but you've got to look at, is the profit in the losses all coming from sort of strategy, or is a lot of it coming down to costs, swaps? So I would need to have a look at like where the losses are if I was to actually change, like flip the narrative, if that makes sense. Because you could trade something like, I don't know, a market that's got like a spread of like 4 or 5, and in your buy and sell, like that's kind of where you're losing 5 to 10 points. That is maybe not reflective in the back test. That we trade the opposite, you're still losing the exact same 5 to 10 points maybe. So add that up over like 6, 7 years of data, 10, 8 years, 9 years, 10 years, and maybe like the system technically without swaps, spreads, things like that's break even, but it's negative because of the costs. Cost is the biggest thing in trading, and it's like why try and get rid of as much as I can, like within reason. Like there's some strategies that you just have to hold longer, and you just need to accept that swap spreads is just part of it. Try to remember where we got to. Where did we get 5? I need to now go back to my little graph. Where did we get to this? Ah, yes. I've got it somewhere here. Let me check. Files. Type files. What was it? Where is it? No, I want to see. Yeah, I mean, like if you can eliminate the slippage and costs, and obviously you can't really eliminate slippage. If you can eliminate the costs and do the reverse, I would say go for it. Why not? If it works, it works. Well, that's check. 2. That's not what I was wanting. That's what I was wanting. 5, 1.5. Cool. Right, let's see if we sort of add ADX below just to see, maybe we want to trade when ADX is below, maybe we want to trade when it's above. We'll see. We'll see. Yeah, strategy. Yeah, I mean, it'd be interesting, Kevin, if I'd be interested in if you do that, come DM me in a month, and I'd love to see the results. I think it'd be super cool and interesting because something I've never done before. I it's just always busy building portfolios anyway, so it's yeah. Down. Stock market's having another decent day. Gold up quite a bit as well. Hopefully this will be quick and insight. What I might do as well is let's do A as well. So I'll do it above. Again, it's just using a period of 20. I'm not optimizing that. Too many optimizations at that point. No. There we go. Right, let's see what we get. Interesting. So I've got 3 more to go, but the results are quite interesting, It's not. That's only up until 2019 to 2023. Okay. 3 years out of the sample data to kind of. Well, we already know the stop loss and breakout levels pretty good. Be interesting just to see if just simply adding an ADX we reduce the trades by, because it already looks like we're going to significantly reduce trade size, trade amount. Just be quite cool to see. Yeah, if we can improve the system just by simply adding volatility, sort of volume filter. see 25, so above 25. So we know kind of anything above 20 is actually killing edge, if that makes sense, because 25 is here, 30 is here. So yeah, we know, yeah, okay. Where are we seeing? Where are we? We're at 2 cents, right? Past 1, 2, 3. So we'll probably go for past 3, 22.5. 4 is there. So yeah, less drop off here. So it'll pick like that one, 22.5. Yeah, we've not done anything to take profit. It's just pure one-to-one, which is super interesting. I think once we've done this test, I'm going to call it a day because that will be pretty much an hour and a half on the stream today. And then, yeah, I'll see what Kieran's got planned for tomorrow. If not, let's just continue with this. Just depends what people want. I don't know, like if anyone, I think what we might do then is just the first 10, 20 minutes, if anyone has a Darwin to review tomorrow, we might just review them and then it can review them as they come in, but might just continue on with this because I'd love to get this into the charity Darwin if we can get something decent from it today. Yeah, I think that'd be cool, super interesting. So yeah, as soon as we get to 2023, we know we're in the out of sample period. So, and I think we got better out of sample than we did in sample, and already in sample is looking 10 times better. I looked into automated batch backtest and slash optimization in MT5. No, actually. I mean, I'm always at my desk, so like I always kind of have one of the screens that kind of open in the background and things like that, so I'm never too worried. And then what I might do is just upload it to my on my VPS at night. I might just run an optimization in the background at night times while I'm asleep. So always kind of do the big batches overnight in a VPS. Is automated back test and optimization good? What kind of software are you using? So yeah, super interesting this actually. We can see that actually, in fact, what we just did there technically over optimized it because out of sample, which is from here, failed miserably. Yeah, I mean, if I want to test like multiple things, I just normally just go to symbols and do like the whole watch list, all market watch list anyway. If I want to test same settings on multiple symbols, but yeah, maybe drop me a message and show me or give me some screenshots of what you mean, and it could be quite interesting. I mean, I'm kind of old school when it comes to this sort of thing, but anything that can kind of speed up the process, like yeah, I'm trying to use Python to sort of do some back tests and some basic things anyway. But yeah. So yeah, unfortunately we didn't actually get a good result on the ADX, which is fine. means that we don't need to think about it or try again. But yeah, super interesting, and this is why I think this is exactly manually doing them takes forever, but with batch testing you can create scripts to back test anything really, all in MT5. Oh really? That's super interesting. Yeah, that's super interesting. I'll maybe need to have a look into that because then it means I could run something like this in the background, prepared for the stream, and then we can go dig into the results. I can show them the build, how to build it, and then dig into the results rather than having to sit here and wait and watch me do a test for what was that, 2.5 minutes. That'd be quite cool. Could be quite cool. But yeah, maybe this setting is over optimized. But yeah, we'll go again. We'll see what happens tomorrow. See what Kieran's got planned first and foremost, and yeah, might see everyone on the stream tomorrow. But yeah, I'm gonna call it a day, guys. Yeah, check out Parallel Backtest MT5. Yeah. This is so this is on Parallels at the moment. I use a Mac, and this is on my Parallels. I just prefer doing the streams and like having the testing on my MetaTrader like in Parallels, like Windows 11. So yeah, I use Parallels quite a lot. Anyway, awesome guys. Thank you very much for joining. I hope loads of value as always. Yeah, I hope I am like giving some sort of value, rather than it just seem like I'm ranting and raving over just anything, to be honest. But yeah, thank you very much for the nice comment anyway. But yeah, awesome. So as I said, see what Kieran says tomorrow. But if not, we'll see you next week. And we might see tomorrow, depending on. I'll probably speak to him tomorrow. We'll discuss things, and yeah, maybe we'll continue on with this because I'd love to just keep going rather than say Tuesday like, oh, we're going to build something new. Maybe we keep going until we get something like a portfolio from this to actually show you like the next stage, because I feel like sometimes like I think the last strategy was a case of not good, bin it, on to the next one. It seems like I'm constantly building things that are not actually flourishing into something. So yeah, maybe we stick at this one, or we try different things. We get something from it that we can get to apply on different markets. So then we're actually making progress for the charity Darwin as well. But yeah, anyway, hope you have an all good rest of your Wednesday. I'm probably just going to keep going with this because there's no real good football on or anything like that. So yeah, have a good night and speak to you tomorrow maybe.